Hello and welcome. You're watching Your Trades on ET Now with me, Snehisha, and with me today is Shreyansi Singh. Let's take a look at how the entire day's trading session has summed up. And well, not all that bad for us, rather choppy when you compare it with our previous days, but not all that much to worry about because Nifty has closed the day at 22,648. That's why Nifty is up 0.2%. Not much to be excited about. Sensex also following suit, up 0.2%. Nifty Bank is the one that has ended slightly in the red, a downtick of 0.3% coming in over there as well. Broader markets also, well, largely in tandem with what the street was doing. Mid cap has ended the day with an uptick of 0.4%. On the other hand, you have the small cap index that had ended as flat as possible, but with a slight negative bias. Now let's look at the individual action when it comes to stocks and individual gainers today. You heard REC today among the top gainers when it comes to the street today, up 9.2%. That's where it shut shop. Raymond also up 9%, Cholamandalam Finance 9%, KFin Tech coming up with an uptick of 8.8%, India Mart 8%, HPCL, Welspun Corp, PFC, REC, all of those were the stocks to watch out for in trade today. In fact, Trent has also ended the day with an uptick of 5.5%. On the other side, now when you talk about the top losers, we'll take a look at the Godrej Pact in just a little bit. But you had Aegis Chemicals, you had GM Financial, Supreme Industries, Castrol India, Patanjali, Just Dial. All of these have ended the day anywhere between 3.5% to 5%. So, well, all of these are the stocks that have weighed on the street in today's trading session as well. On the other side, when you take a look at all-time high, you have the likes of Raymond, KFin Tech, Carborundum, Trent, Ashok, Leyland, Triveni Turbine, Power Grid, Sobha. All of them have ended the day's trading session at their all-time high. On the flip side, then, you have only one stock that is at its 52-week low as of now, and that is Kotak Mahindra Bank, and that stock has ended the day with a cut of almost 3%. So that's Kotak Mahindra Bank for you on your screen right there. But well, largely this is what the market setup looked like for the day. On the other hand, let's also visit the Godrej group of stocks, the likes of Godrej Industries, Godrej Properties, Godrej Agrovet, you have Aztec Life Sciences. Most of these stocks have ended the day in red, and you have sharp cuts coming across Godrej Industries and Godrej Properties as well. And Godrej Properties was the one to watch out for in today's trading session on the back of the deal that has emerged between the two separate Godrej entities. Now the entire 3,000 crore land bank has now gone to Godrej and Boyce from Godrej Properties. So now they don't have that land bank anymore. Remember, it was initially always owned by Godrej and Boyce, but Godrej Properties used to get a 70% cut from that, and now that cut has come down to 10%, and they also don't have a non-compete coming in for the real estate business, so that's what weighed on the stock. But Shreyansi, lots of other stocks to watch out for, and well, yesterday, even though the markets were shut, we did have some auto sales data coming in.
Absolutely, and auto sales data really did keep a lot of these auto majors in the fast lane. So, when you look at the data coming in for April, when you look at the strong ones, you've got TVS Motors, you've got Eicher Motors, you've got Hero MotoCorp, Bajaj Auto, Tata Motors CV, and Ashok Leyland as well. Now, when you look at trends that are emerging right now, what you're largely seeing is that there was strong demand for two-wheelers. When you look at PV growth, that moderated just a little bit, and launches for financial year 25 remained in the spotlight. Now, you did also have tractor demand that remained muted largely. And when you look at the CV segment, there also you had mixed growth signals coming in. So that largely is the handover coming in from April sales data for these auto majors. And then, of course, there was one very important cue, that was earnings, and that unites three counters. You've got Dabur, you've got Federal Bank, as well as India Mart. Now, when you look at Dabur, of course, the revenue saw an uptick of 5%, profit after tax saw an uptick of over 16%, and when you look at margins as well, they expanded. When you look at Federal Bank, then that reported numbers largely in line with estimates, but of course there was that uptick in the net interest income, and the stock of course was doing very well there on your screens. Uptick of about 3.5% coming in for Federal Bank. And speaking of the stock doing well, there's of course also India Mart. Good set of numbers and good commentary coming in from the management, and a good set of numbers after a very long time coming in for India Mart, and that is something that you did see the stock price reflecting, an uptick of 8.2% on your screens for India Mart. Now, of course, we're also keeping an eye on a lot of result reactions. So you do have Titan and Britannia, and those results are expected, and they will be keenly watched by the street as well. And in terms of Other news then, of course, you've got the ET Now exclusive on Ugrow. Ugrow will be raising 1,200 crores via share or warrant sale as well. Now, when you look at the fundraise, it has PE players like PE players as well as large hospital and group family offices as well. We'll be getting you more details on this throughout the course of the show as well. But that largely is also on our list, Neil.
Well, absolutely. And also, let's circle back to Federal Bank. And we did manage to speak with the management today, and good growth commentary coming in. But the stock has been very excited today, and the street has been excited about the stock because they discussed the succession plans with us. The bank is looking for a new CEO. And well, KVS Manian has stepped down from his previous role, and the street is anticipating that he might join Federal Bank going ahead. And as of now, it's all speculative, but we'll bring you more details on this soon as well. But moving on, now let's understand what the market setup was like today and what we can expect going into tomorrow's trading session. And for that, we're being joined in the studio by our in-house technical expert, Kunal Bothra. Kunal, hi, thanks so much for joining us. Well, today was an expiry, but we didn't do all that bad. We managed to end the day slightly in the green. What's your outlook going ahead? And the SMIDs have not performed as well today. So what's your outlook over there as well?
Good afternoon. First of all, my belief is that we are heading into a zone of the indices consolidating into a range. The range is getting a bit more broader. The good part about the market so far is that the market breadth is still on the healthy side, which means that the mid caps and small caps are still looking attractive. There are many stocks which are heading towards breakouts on the mid cap front, and then they successfully get into a follow through up move post the breakout. There's volume chasing these kind of breakout moves. That's also another comforting sign for the markets. But the difficult part for the markets so far is the lack of large cap participation. So we've seen that many of the sectors have either gone into a bit of a trading range, or if there is any kind of a sector which is going through a breakout, the number of large cap names which ideally should have participated, that has dropped down significantly. And to add to the concern for the market so far is in the last 2-3 weeks, the India VIX has managed to jump back from 10.5 odd levels to now 13 to 13.5 odd range. That's the other tricky part for the markets, which means that over the next maybe 1 to 2 weeks, we could be at a point where the intraday volatility for the indices could be pretty much higher. So the action is more stock specific, and the indices could remain to a range as of now. The critical support for the Nifty is 22,250 mark on the short term basis.
Alright, so not as much large cap participation, and India VIX might spell trouble for us, and that is the word coming in from Kunal. But Kunal, also tell us a little more about which are the stocks that you're keeping on your radar in terms of the top bets that you've compiled for our viewers then?
So I'll mix with a mid cap and a large cap name. HBL Power is something which looks interesting. In fact, the stock has given a flag pattern breakout today on the short term charts. About that 530 plus level, so would suggest a buy with a target of 600, expecting at least another 8 to 10% up move over the very near term. Stop loss could be kept at 515. And Asian Paints is something which has come back into a very big breakout mode. The stock has formed a triple divergence on the weekly charts. Excellent volumes for the stock in the end of the previous expiry, and today we've seen the stock breaking past about the levels of 3,000 or coming close to that 3,000 mark. On the futures also. So I would suggest a buy with a target of 3,100, stop loss at 29.20.
All right, Kunal, thanks for sharing your picks with our viewers. HPL Power is not a stock that we talk about frequently, but yes, we'll be watching out for that as well. With that, Kunal, we'll let you go. But let's get a move on and slip into the word from the wise segment. And today, that is Axis Bank's Neelkant Mishra, who says that the most important job for the newly formed government in the days to come will be to prioritize the infra funding to the state governments. Hear out an excerpt from that chat.
Turn in the real estate cycle, frankly, the downturn in real estate that we saw after 2012 was a very important part of the slowdown in the economy, where trend growth expectations slowed from 8 to 6.5%, to a large extent because of the slowdown in the real estate cycle. So the fact that the real estate cycle has turned, the fact that we actually have built a significant amount of road and rail infrastructure, airports are running, port capacities have expanded, power is available. So I think all of those changes are good and progressive. But as we think about what should be our work for the next 5 years, so that the 3-5 years after that can also see similar growth, I think our priority has to be urbanization, and a significant amount of effort is needed in making sure that adequate funding is reaching the city governments.
Yeah, that's the word coming in from Axis Bank's Neelkant Mishra. But viewers, we'll slip into a short break on that note. But as we let you go to the break, here's the chart of the day that talks about the Fed Reserve's moves and the rate trend that has been taking place when it comes to the FOMC over the last few months. Remember, this time around, the Fed has yet again kept its rate unchanged, and Jerome Powell has said that he does not anticipate a rate cut in the next meeting as well.
Welcome back. Thank you so much for staying tuned in. Well, let's take a look at cues coming in from the world of derivatives then. And when you look at index futures trends then, for the 9th May expiry, you do have Nifty that had a long build-up that was being noted. And when you look at Nifty Bank then, long unwinding was observed for Nifty Bank. When you look at India VIX then, India VIX was pushed up at 13.4 levels. There on your screens, around that 13.4 mark. And when you look at active calls then, for the 9th May expiry, you did have mild call buying that was observed at 22,700 levels. When you look at 22,800, that formed a key call writing level as well as a key resistance level coming in. Now, when you look at active puts then, what you see for 9th May expiry is that at 22,600 is where put writing was observed, and also at 22,500. Now 22,500 also formed a key support level, and those largely are the cues coming in from the world of derivatives.
Well, absolutely. So that's what the derivative snapshot is looking like today, and largely that uptick in weeks that we saw, that spike up 4.5%, can also be attributed to today being an expiry. But let's talk about the big story of the day, and whether it's not one, not two, but three stocks that we're going to be talking about today, and that's on the back of their earnings. The likes of India Mart, Intermesh, that counter was up almost 8% in today's trading session. You have Federal Bank, that counter also up 3.3%, and Chola Investment also very splendid gains coming over there. Spectacular gains, 9% up is where Chola Investment has ended the day at. So we'll listen in to all of those managements as they reflect upon their quarter four numbers and the road ahead for them. Listen in.
The operating outlook for the next year looks better because one, we have been able to get some handle on the margin. Our margins for the fourth quarter used to be 26-27%. We have been able to do on a standalone basis a margin of closer to 30% this particular quarter. And the management team is confident that we should be able to maintain a margin of 30% here on. On the customer addition front, I cannot give you any guidance for the next quarter or so, but I am pretty confident that in the next 2 or 3 quarters, we should be able to get back to our normal growth rate of 5,000 customer addition per quarter per month, per quarter net addition. Once that happens, then our collection and revenue will also start to improve. So for the entire year, we are looking for a recovery from the lows of the last 2 quarters after in the H2 of the FY25.
We believe that our model is architected to give us a standard through the cycle credit cost of about 0.8%. And we will strive to do better than that in specific quarters, but the guidance is that we will be at 0.8%. 3 reasons why our ROA could trend up from here on. The first is that operating leverage will play out. Okay? We have now 4,000 people, a fully built out platform. We have the ability to originate a significant amount of loans. And as the balance sheet grows, our costs will not increase in the same proportion. So therefore, that's one reason the ROA can go up. The second is the fact that we have an off-book strategy.
Next year, we are looking, again, I would not want to put too much hopes. We will still keep our target at around the 20-25% level. And because a lot of additional factors needs to be considered, monsoon, elections. The vehicle finance will become 50% of the overall book. The loan against property and the home loan would constitute around 35%, which is like a property-based, lending. And then you will have the other newer segments which we have started, like the unsecured and the SBPL and the SME segments contributing the balance 15%. Broadly, the unsecured should be in the range of around 8 to 10% levels is what we are targeting right now.
The board is working on it with a search committee. The board is in the process of putting all the recommendations together, and the board will do what is needful. We've got time. Sham's here till September 24th, so we will work on that timeline. The view has been what we've said all along. It's the best candidate for the job.
All right, then that was the word coming in from those managements. Splendid gains coming in for India Mart, Federal Bank, as well as Chola Investment then. But moving on then onto an ET Now exclusive, we learned from reliable sources that UGRO board is likely to approve fundraise and marquee investors are likely to participate. For more on this, we also have Cheryl who's standing by with more details. Cheryl, tell us a little more about this exclusive then.
What we're picking up from sources is that UGRO Capital is looking to raise funds to the tune of about 1,000 to 1,200 crore rupees. This could be via share or warrant sale. But what's interesting to note is the fact that what sources have told us that very marquee names are likely to actually look at participating in this particular fundraise. What we're picking up from sources is that large PE players, South-based, big, large hospital group family offices also looking to actually participate in the fundraise. And not just that, you also have the promoters and the employees, or rather key employees, that will look to participate in the fundraise for UGRO Capital. But apart from that, you have a former CIO of a reputed AMC also who's likely to put in funds. So yes, they are looking to raise funds to the tune of 1,000 to 1,200 crore rupees. But what's also the reason why they are going to raise this fund or look to utilize this fund is in order to grow their loan book from the current 10,000 crore rupees to about 25,000 crore rupees. So that is the size that they are trying to build for their loan book, and that's where they will use this growth capital. We did reach out to UGRO Capital management to get their comments on the story. While they commented is the fact that since their board meet is underway, they at present don't have any comments on the matter. But what we are picking up from the sources, the fundraise could be to the tune of 1,000 to 1,200 crore rupees, and also you have marquee names that are likely to participate in it.
All right, Cheryl, well, thanks so much for taking us through that. But let's shift focus and talk about another stock that was in focus today at its life high. And we're talking about REC because that has ended the day with an uptick of more than 9%. Now, Vivek Kumar Devangan, the CMD of REC, talks about what lies ahead for the company and the growth path going ahead as well. So listen to what he had to say.
We are committed that our net interest margin will be more than 3.5. We have been able to, last year our net interest margin was about 3.38%. Now it has improved about 3.57%. But we are making constant endeavor to reduce our cost of funding actually. The more of external commercial borrowing and judicious use of our hedging options, we have been able to reduce our cost of external commercial borrowing below 7%. Current year, we are quite hopeful that because bidding process has started, we'll be able to resolve KSK Mahanadi, Kinnar Nasik project is there, Hiranmaye project is there, and we have recently done restructuring our TRN Energy. And the remaining projects which were heading towards liquidation, we have made already 100% provisioning. Return on equity would be more than 20%. Return on asset is going to be more than 4%.
All right, then that was the word coming in from the management at REC. And they talked about their ROE levels and ROA levels, quite confident on both of those levels. And that was the commentary that we just played out for you from REC. But let's switch focus then and get you a roundup of all the stocks that were buzzing in today's trading session. So Gaurav is standing by with that roundup. Gaurav, tell us which stocks made it to your list.
Well, yes, there are a couple of stocks buzzing on the back of the Q4 results, and if you look at Dabur India, now this stock was up almost 2%, and the reason being that if you look at consolidated numbers, the revenue was up almost 16% on a YY basis. EBITDA margins also improved, and at the same time, if you look at domestic volumes, those were up almost by 4.2%. And on back of this, we saw a positive momentum coming up in this stock. Next one, let's talk about South Indian Bank, because if you look at the numbers, those were quite weak for the bank. Net interest income was up only 2% on a YY basis. PPOP was down 22.8%. PAT was down 14%, and we also saw this stock was down almost by 5% in a day's trade. Next one, let's talk about Skipper, because if we look at the numbers of this company, consolidated revenue was up almost 75.5%. Q4 also witnessed an order inflow of 1141 crore rupees for the company, but at the same time, if you look at PAT growth, it was up almost only by 6.1%, and on back of this, we saw this stock also shown some kind of negative momentum in these days today. Next one, let's talk about Blue Star, because if you look at the numbers, revenue was up almost 26.8%. PAT was up almost, PAT was actually down almost by 24.5%, but this was because of the adjustment that 4Q FY23 had for the company. And if we exclude that adjustment, PAT was up almost 100% for the company. And lastly, if you look at EBITDA margins, those also improved to 7.2%. And on back of this, we saw the stock shown some kind of uptick in the day's trade. And lastly, let's talk about Century Textile, because the company's wholly owned subsidiary Birla Estate actually announced a record sale in one of its towers, which was recently launched, worth 2,500 crore rupees. And with this record sale, now they stand at a total sales value of 5,400 crore rupees from this project. And on back of this news, we saw the stock was also up almost by 2% in a day's trade. So all in all, on back of numbers and also on the back of the updates, we will watch out for these companies, because we saw strong momentum coming up in this stock in the days today.
Thanks so much for taking us through that quick roundup of all the stocks that were robust today and the ones that we need to be watching out for tomorrow. But viewers, with that, I'm afraid we're completely timed out on this edition of Your Trades. From me, Shreyansi, and the entire team that put this show together, thanks so much for watching.